what we do at Plains is, like we say, we focus on the fundamentals. What problem are you solving for what customers? How, and what might they be willing to pay for it? And how are we going to build that and scale it?
Welcome to the Golden Group Strategic Growth Podcast, featuring expert insights, interviews with thought leaders, and business plan triage. Hosted by Kyle Golding, award-winning entrepreneur, CEO, and chief strategic idealist for the Golden Group.
Hello, everyone, and welcome back to the Oklahoma. I almost said Oklahoma Venture Forum podcast. I forgot the name of my own podcast.
You got to keep your brands in order.
Right.
Yeah,
I've done that before, so I'm going to keep that intro and start again. Hello, everyone, and welcome to the Strategic Growth Podcast. I'm your host, Kyle Golding. I'm joined by Justin Wilson today. He is the president and managing director of Plains Ventures. Good to see you today, Justin.
Good to see you, Kyle. I'm grateful that you had me back. Whenever I joined you on the OVF podcast, a couple years ago, I had just taken the role. We were just getting going. I barely knew where the bathroom was in the building, right? And so, you'd have been well within your rights to never ask me to come back.
No, it was a great podcast interview. In fact, we went long. I think I promised you 20 minutes. We almost went 30 minutes on that one. So recently on this podcast, we talked to the head guy over at I2E, Rex Smitherman. Mm-hmm. And so Plains and I2E have a relationship together. Yeah. So first, let's introduce for anyone who isn't familiar with what Plains Venture is and what you do. Yeah. And we'll talk about how it's related to I2E. And then we'll get a little bit more into who Justin is and how you came into all this.
Yeah, absolutely. So Plains is it is in some ways a run-of-the-mill venture capital firm. We have funds that we invest on behalf of investors. We have different investors that range anywhere from high net worth individuals, over to the government or sovereign wealth funds or endowments, family offices, those things. And we manage those to try to achieve a return on invested capital. And we do so by investing in really, really exciting early stage tech companies. You mentioned I2E, and you got to talk to Rex, who's one of the greatest human beings I've ever met.
He's one of my favorite people.
He's just
a
fundamentally wonderful person, and I'm proud to know him. We have an intimate relationship with I2E because Plains actually, it in some ways it's a product of I2E. It is, we're still connected at the hip. I2E was born on this promise that innovators and the founders here in Oklahoma were worth working with and worth investing in. And if you set up these technical support structures and you just serve them, then there would be a lot more kind of successful business creation and kind of economic development.
If you build it, they will come.
Yeah, right. Well, if you help them build it, they'll build it a lot faster and more successfully, right?
Just a little help.
And everyone benefits in that way, right? And so they were literally born of this kind of like go into the office every day and thinking, what are the things I can do to help these companies succeed? What are these things I can do to help these incredible innovators get it off the ground, and so they're like, what are the things that they need? And they started realizing early on, like, well, one of the things they need is money, right? Sure. So they started going around and trying to, put together capital to get these founders access to capital. And, it started out as just kind of proof of concept stuff. So they would try to get them a few $1,000s to build a prototype and they would work with them on business model and kind of evolving the strategy and the plan.
Seed stage.
Yeah. Well, pre-seed's the way I think about it. And we can get into that, like how I view the staging and how we approach that at Plains. But so eventually, not only were they right, there were these really wonderful innovators here. It proved out that if you invest in them, really, not only do they do amazing things from an economic development standpoint, great companies and make jobs and do wonderful things, new ideas, new products and things. But if you invest in them, you can make a positive return. And at the time, that was kind of revolutionary because it was not kind of implicit. It was explicitly thought that could only work in places like San Francisco or New York or Boston, where there's these incredible tech clusters, incredible capital clusters, and that places like Oklahoma just wouldn't support it, right? Well, they proved it right, or they proved that wrong, right? Like they proved that not only does the innovative potential exist, but the return potential exists. And so as they went along and they kept doing this, eventually because of the positive return generation and the increased kind of proving out that model, there became such an amount of assets under management that it needed to be spun out and professionally managed, right? And so I'm really proud of that at Plains, because we're not just, we literally were born out of a service to entrepreneurs mindset, right? Like we weren't born just attacking it from a rent-seeking kind of position, which is unfortunately a lot of what venture capital is painted with, right? It plays an extraordinarily important role, but like people are right to sometimes have a bad taste in their mouth with it. But we were born out of that, right? Out of this kind of service mentality, and so today we're depending on how you do the math, well over 130 million dollars AUM. We manage several different funds on behalf of lots of different investors across different some different strategies. Primarily, we exist in Oklahoma for a reason, right? Like we believe that the market was missing this incredible opportunity, right? Or I believe that, right? Like that's why I came home and accepted this role and am pretty passionate about it. What I2E did in those early years with those early funds was they removed the uncertainty for me, at least, that this works, because they proved it, right? And in fact, in my opinion, the investment thesis at this point in time is actually superior to what you might find in those traditional clusters, because as capital flooded into San Francisco and New York and et cetera, then all of a sudden the ability to derive return may have went down. And because even though the model has grown in Oklahoma, and now you see a lot of other professional investors alongside it, and we're like really proud to invest alongside them, we're still not anywhere near that kind of competitive dilution effect, where you bid yourself out of returns. And so
market saturation.
Yeah. And so in fact, I would actually argue that it's somewhat flipped. If I'm an allocator, I probably like getting off the beaten path as much as I like being on it at this point.
Yeah, certainly. So how does that also kind of dovetail into you and the organization's investment thesis? Like, what's your approach, and how are you kind of trying to make sure that you're doing the best job with that?
Yeah, absolutely. Right. So again, like I would say that kind of born out of like thinking about like what are these companies' needs. There's a bit of a, you could argue that there's a little bit of a scarcity mindset in there, but that it just means that, like, listen, I'm not silly. I don't think that we have no differences from those coastal enclaves. We are a much more capital constrained environment than what exists in San Francisco or New York. And what does that mean? It means that we, from my perspective at least, and I know that there are some that would argue with this, and they may be right. But from my perspective, what it means is that if you want to be successful, you have to focus on the fundamentals. So you can't play greater fool theory, right? Like I can't say, all right, I'm going to time this market. I'm going to, and I'm going to lean on my ability to create fervor downstream to pump this up and sell it off based on these kind of trend frenzies that have popped up. You see them in some, a variety of different asset classes over the years. We don't do that, right? We can't, because I can't expect that there's going to be some large stream risk taker down, that's going to be willing to take this from me, right? So we have to, have a high degree of conviction in the blocking and tackling. Like, what is it exactly that we're investing in? How exactly are we going to build this? How exactly are we going to make this money? And so, what we do at Plains is, like we say, we focus on the fundamentals. What problem are you solving for what customers? How, and what might they be willing to pay for it, and how are we going to build that and scale it? Right. What are our unit economics, right? Like, what can we expect for every, good or service we provide, right? Like, what can we expect to make, and what might that cost us, and how can we, how are we going to, get it off the ground and going and building and really creating value? But it kind of falls down on that, those kind of the fundamental value creation mechanism. So we care a lot about that, right?
So tell me if you would agree with this, because I brought this up with Kevin Moore on the podcast, and
Kevin's my guy.
We've seen it a few different perspectives, which of course is part of business and definitely investing. Mm-hmm. The attitude of investors, whether high net worth individuals or family offices here in Oklahoma, in the Midwest in general, is a different attitude than the coast, because that's how they've built their a portfolio of 20 to support 20 type. And here, when someone invests, whether they invest $500 or $5,000 or $5 million in a business, they're not thinking about one unicorn supports the 20 misses. They're really thinking about every dollar I put in, I hope to see that business do their best and actually work. Like we're not investing in as much potential and much more realization here. I think it's the attitude of investors and successful people in the Midwest. Do you agree, disagree? Do you think?
Well, I think that unquestionably that's true for a lot of the attitudes of investors. I probably fall somewhere in the middle on what works and what doesn't. In an ideal world, we can't underwrite that we're gonna have multi-unicorns. Although I'm proud to say that Plains does have a multi-unicorn, and I can tell you, it makes it a lot easier to hit those return goals. I spoke about the history of this organization proving that this works. Right. That's one of the reasons. One of the ways in which they prove that it works is Oklahoma can produce a 2.5 unicorn that goes to IPO, right? Like that can make generate a great deal of wealth and momentum. I've yet to see an early stage tech venture fund that doesn't have losses. That's the nature of that's the mathematical design.
True.
Right?
Yeah.
And if you have total losses with any of your portfolio allocations within a fund, you can't have just kind of marginal market rate returns in the ones that do go on to do well. You have to have outsized returns. And so I do think that there is something of an attitude that we have to do investor education to set their set their expectations appropriately. There are going to be losses in this portfolio. We're going to do a great deal of deep analysis and deep diligence. It's some of Plains' hallmark.
Right.
Every single investment that we make, we do believe it has the potential, but we're savvy enough to know that sometimes we're just wrong. This is early stage venture, right? Like either we miscalculate the risk or or maybe we appropriately calculate it and it just falls into the miss bucket. On their ability to develop and successfully launch the product or execute, or what the market, a lot of times we invest pre-revenue, and so we don't actually know what willingness to pay is, and so we just miss on that.
Sometimes it's just bad timing.
Yeah, a lot of times it's just bad timing. There's a lot that goes into it. And so what does that mean? It means that it means that the ones that do go on to be successful need to be really successful. And so I argue that if you think that you can build out a venture fund portfolio that has 100% hits,
no one ever has, right?
No, it's never been done. And not to my knowledge. And if you almost definitely, the markets are pretty savvy. You're very rarely going to get arbitrage, and if you do, you're not going to get 15 of them in a row, right? Like, and so if
you should buy lottery tickets if you're that good.
if you have 10 hits, almost definitely you're not taking much risk, and that means that you're probably not going to be getting much return,
right? Because that's the balance, right? Risk reward.
Yeah.
Now you mentioned earlier coming home to fill this role.
Yeah.
You're originally an Oklahoma guy, but then you went off into the world, and then were lured back to play this role. And on the last time we discussed on a podcast, we talked a little bit about your upbringing. But so small town Oklahoma, and then you went to Washington D.C.
Yeah, certified hillbilly, proud Okie. In fact, the entire team at Plains, I like to say that we're a collection of Okies by choice. We have a PhD neuroscientist that this is where she wants to be. We have a young man on the investment team that's from he grew up here, but he was in New York City at Goldman. This is where he wants to be. My head of portfolios, he's a longtime Silicon Valley semiconductor space veteran and multi-time CEO. I have a CFA who is one of the sharpest guys I've ever worked with in finance, and if he wanted to be anywhere else, he could be there, right? Like we have a whole bunch of really, really sharp people that could be elsewhere, but that want to be here that's really, really important, in my opinion, because it enables everyone to be on the same page and right size towards what we're trying to build and what it means to build it. So that was really, really important to me. I spent, I took a circuitous route to finance. I didn't grow up wanting to be a venture capitalist. Southeastern Oklahoma, you don't even know what that means, right? And maybe why would you? But so I spent the earliest part of my career in medicine, and then went into the nonprofit world for a while, and I found myself with a presidential appointment that took me to Washington D.C. and helped oversee the agency that oversaw a large amount of financial assets on behalf of Native American tribes, of which I'm a proud member. And after that, it was finance for me. It was that's where I wanted to go. And so I was very, very fortunate to be able to get an MBA from Yale, and I spent some time managing an opportunistic private equity fund on behalf of my tribe, the Choctaw Nation. I was really proud to do that. My wife, I met her when we were living in Oklahoma City prior to ever going to DC, and so we made the agreement we're going to go on this adventure, and it may take us to different places, but in an ideal world, we'd be back here doing something meaningful here, and we're not going to force it. But if that comes along, that is optimal if the timing is right, and because I believe in this investment thesis. I wasn't even looking for, a change in my career at the time. I was pretty happy doing what I was doing, but, it was one of those things where, like, the more I talked to them, the more, the less I was able to say no. Because I genuinely believe we have the ability here to generate, positive risk-adjusted returns for our investors. I believe that we can serve incredible entrepreneurs, and I think that, we're well positioned for growth.
The reason I wanted to specifically have that conversation was as a small town Oklahoma guy who has spent my entire career being told you just can't do that in Oklahoma. You do have to leave, and it won't happen even in the Midwest. Disproving that thesis is one of my favorite things in the world to do.
My East Coast friends would laugh at me whenever they're like, "Wait, you're gonna be a VC in Oklahoma? Are you, what are you going to invest in teepees, right?" Like and usually I would just say yes. That's what we're doing.
That's
right?
Where the money is.
It is. Most of the outside world does underestimate this part of the country, and good, right? All that means is
exactly.
For an investor, that just means well-priced opportunity.
Right.
Now that it creates challenges that I think would be foolish to ignore. But
opportunities at the same time.
Exactly.
There's
right?
pro and con and strengths and weaknesses.
Yeah, and I would love to pat myself on the back and say, I'm telling everybody that they're wrong, and I'm going to prove them wrong. But because again, planes only existed once that question was no longer a question, right? Like they had proven that this works, right? Like they had a successfully exited, high performing fund that was, I hesitate to, quote returns because, you dance with getting afoul of the regulators.
Yeah, we don't want to do that. We don't want to get anyone in trouble.
But I would say it was it did very, very well.
Right.
And if you were an investor in it, you would be happy. But it's less about like where it ranked relative to the places that you could put your capital at that time. It's that prior to that, it just wasn't. No one could know for sure if it would work. Right. Now we know that, and it's not even a question. It is it's just all right. How high can we take it?
So with over $100 million managed right now, what's the future look like? What's the next 18 months, the next 5 years?
So what's wonderful is like, in the early days, we were right? Like the, I2E and, there were some others that, but they largely co-invested alongside angels and individuals and some family offices that cared more about economic, investing in their community than they did about returns. And now you have this wonderful kind of really kind of congenial and collaborative environment of professionals, right? So you have the Echoes, you have the Atentos, the Cortados, the Sirac, love my Kevin. James down in Norman is, we're real close with him. We do a lot with James at Boyd Street. Really, really proud of that. James and Matt, Matt Victorum, there's a lot of professionals. Mm-hmm. And what I believe, and I think we've seen some evidence of this, is that, well, one, we don't have to be the only one serving the market, right? Like all of a sudden we can distribute our risk more evenly across each of us. I say that both in terms of total dollar demand as well as the labor. I mean, this is a labor intensive asset class. Yeah. The attention span can be distributed more evenly. And what I think we've seen evidence of, especially as these accelerators have taken hold and are getting churning and stuff, is that a rising tide lifts all boats, right? So you have way more, not just assets under management for us, but assets being managed to similar strategies across the state and across the region. Mm-hmm. And so what does that do? It begets more opportunity, and you're seeing a greater volume of deal flow that is coming to you, maybe a little bit more mature than it was. So you talked about like that unique relationship with I2E, and so that's another way that we benefit from that growth story, right? Like it's not just that they enabled us to be a venture capital fund, right? Like that we were born out of that. It's that by still having that direct relationship today, if a company comes to me, if a founder comes to me and it's a really good idea, but it's just a little too early, right? They need to demonstrate, kind of proof of market, or they're really just not ready to raise the capital that's going to be required to get it going. We can refer them over to I2E or one of our other kind of ecosystem partners for one of their classes, the Bridge 2 class at I2E, which I think they're gonna have a different name for that. But it is remarkable, like the difference in the viability of both the product and the ability of those founders to communicate it, and how deeply they know their company in terms that investors can understand, is night and day. And so if a company has a really, really good idea that we believe could create a lot of value, but they're just not quite ready, there's that kind of easy relationship that we can say, hey, go spend a couple months with these guys, and then when you come back, I think you may be ready. So, even going all the way back to college kids, right?
Mm-hmm. I2E is doing the Love's Cup, and we just had the awards ceremony recently. So engaging young people as young as 18, 19, 20 years old in college to take their entrepreneurial ideas and create real products, create real companies, pitch, get the real world feedback, win money, win their initial investment, a couple $1,000s here and there. And then some of them, could go on and become a real company and go through the whole system. I love that. That was just last week, so it's fresh in mind, right? So I love that, and so Plains is like, we're really, really proud. We financially support it, and a lot of my teammates, I basically have if you want to volunteer for a Love's Cup, it's it's kind of a carte blanche policy, right? Like it's one of my favorite things to do. It's really amazing. It's amazing. I think it's one of the most underrated components of the entrepreneurial ecosystem in the state. Most people in the state know about it, but I don't think that they know enough. I think that if we get more people going to that thing, they would be blown away, right? Because it's not just about the company generation, although there have been several like legitimate successful companies that were born out of that competition. In fact, we've had a couple Right.
And we're pretty proud of it, right?
And some of the rising stars have come back and are working in venture capital, working
absolutely.
at I2E, working in the community.
I was texting with Susan Mooring, who's the investment principal over at Cortado. She was in attendance, and at one point the presenter said, all of our alumni, whoever's participated in this program or in this event before, stand up. And I saw her stand up, and I was like, "What? I didn't know you're a Love's Cup kid." And she was like, "Oh yeah," and could like just cite her, her year and what they did, real quick. So there's a whole bunch of people, like both on, kind of in investor roles, working at our portfolio companies, which is one of the things that we like to do. We like to, do as much as we can to help our portfolio companies recruit talent, and so that's really important. But like not just that. I was sitting at the table with some of the team from Loves, and they were talking about all of the Loves Cup, alumni that work there, right? Yeah, and a lot of companies do that, and they're extraordinarily proud of that because they know that they come to them with a perspective and skill set that is valuable to them, and so. Whether they go into entrepreneurship or investing or working at a high growth tech company, that event is so extraordinarily beneficial to this state and kind of the being a progenitor for great ideas and great talent.
I think that kind of sums up the reason I wanted to have you on the podcast today. We touched on the idea that you can't do that in Oklahoma, but everything from super early and college age, and even I2E is working now with some high school business plan competitions, through investing through planes or private venture or all of the other opportunities, OVF, all of those organizations all working together to creating this ecosystem that is so successful people can't ignore it anymore.
Yeah. And so again, the if there's anyone out there, and probably there's still quite a few people out there that don't know or don't believe
at their own loss.
Yeah, exactly. Yeah. They're just missing opportunity. Yeah. Because again, the question's answered. Yeah. It's really not. It's not even a question, right? It's just who knows the answer at this point. But so several of us, most of the capital firms that have grown up are not. We tend to be generalist investors. There's a few that are thematic focused, but oh gosh, I almost forgot one of our closest professional friends, OLSF. We love Sean and Dr. Paiva and do a lot with those guys. And so they only do life sciences. But most of the professional groups, professional investors, are generalist investors. And what does that mean? That means that all of us need, to make sure that as many really, really smart people in the environment know about us as possible, because, our core competency is learning, right? If a company comes to us from some, random field, we may not already, someone on the team may not know everything there is to know about that in order to make a decision, right? So we need to have someone that is in our network that we can call and say, hey, help me understand how this industry works, right? Like how does the value chain work and for companies like this, and what are the things to look out for? And maybe you would maybe you'd want to serve on a board and represent it. Maybe you would like to join that company and be a part of helping them grow. Right. Maybe you want to invest, right? You can invest either into our funds or alongside us. There are so many ways that people that have done it, right? Operators or investors can get involved and be a part of this trend that I think is durable.
And I think that's something people forget or don't pay attention to enough when it comes to discussion about venture capital. Everyone goes straight to what's the check, but it's the expertise, it's the network, it's the relationships, it's the experience that comes through working through whether it's Plains or any other VC, in order to take that good idea that's become a company, that's become something investable, to be something that has a real future.
Obviously, if you don't write checks, there's only so much that you can do, right? Sure. But check is just one component.
Check's not enough.
It's not enough. And in fact, it's commoditized at this point. If you're not adding value, you're really just kind of in the way. And, and I think like my team spends an an exorbitant amount of our time, not just in the investment decision, but like, all right, what are the things that we can do to help them succeed? So, in the last, 6 months, I mean, we've attracted probably, 10 key hires to portfolio companies. We've helped renegotiate supply chain agreements that bring down like, carrying cost and capital cost and capital exposure for companies. We've connected portfolio companies and helped to negotiate, multiple deals, on the buy end and and on and on and on and on. I mean, we look to do that. Now, we're not always successful. We're not all things to everyone, right. but we do our best to know. Where we can add value and make sure that we do.
That makes sense. I appreciate you coming on the podcast today and giving us so much more depth into VC as a whole, but definitely what Plains does and the role that you guys are playing, how it dovetails with I2B and everything else, giving the audience a even deeper and different perspective than some of the venture capital discussions we've had before. So I appreciate it so much.
Well, I'm appreciative of you. Like, the question is answered, and we need people to know about it. Right. Questions, who knows about it? And so, I gotta tell you, I'm really, really grateful for the role you play in that, and how you've worked so hard in so many different ways over the years to trumpet this. And so, we all owe you a debt of gratitude.
It's my pleasure. I appreciate you being here. I appreciate everyone who listens to the podcast, and I absolutely appreciate everyone who subscribes. So you guys make sure you hit that subscribe button. Check in each and every month when we have new episodes of the Strategic Growth Podcast. I want to thank Justin Wilson, my guest today, the president and managing director, Plains Ventures, for our second conversation, first time on this podcast. I appreciate you being here today.
Thank you.
Thank you for listening to the Golden Group Strategic Growth Podcast. Please subscribe so you never miss an episode. Follow the Golden Group on social media. For more information, past episodes, or to contact us, please visit thegoldengroup.com.